Hello, this is Ernest Burley Jr., your certified financial planner, your chartered financial consultant, your NFLPA registered player financial advisor, your investment advisory representative. I hold the Series 6, 63, and 7 that allow me to offer securities products to clients across the country. I'm also a licensed insurance agent with over 30 years of experience in the industry and over 25 years in business. I'm also your author of 2 books on money management. Money Management Easy as 1, 2, 3, and Money Management from Grade School to Grad School. These books are being used across the country to teach financial planning principles, money management principles, and insurance concepts and principles to children, youth, and adults. So thank you for those who are already supporting me and teaching from the book. And I thank you in advance for those who are going to order the book. Please order by the box load for your family reunions, for Christmas gifts, for your church family, for financial freedom type courses and things of that nature. I really appreciate it. Sell out. So my publisher is overwhelmed by Amazon calling them for more books. Okay. I have clients all across the country from the north to the south, from the east to the west. So state lines don't confine or restrict Burley Insurance and Financial Services from helping people across the country. I specialize in wealth management, also like investing for clients, IRAs, 401k plans, retail accounts, brokerage accounts, things of that nature. Also asset protection, so protecting what people have accumulated, as well as asset growth, trying to strategically grow what people have at their disposal. Also financial planning, whether it be comprehensive financial planning or just basic financial planning, and all different types of insurance. So my firm offers auto insurance, homeowners, business policy, life insurance, long-term care, disability, church policies, investment properties, jewelry, boats, all different types of insurance, right? So my firm provides that for clients across the country. In addition to athlete management. So that's like on the NFL side, I'm an NFLPA registered player financial advisor. On the NBA side, I'm an NBPA certified player agent. So if you know someone with some skills, I can get them in front of scouts and coaches, GMs, to give them an opportunity to show their skills, see if they can get on an NBA team. Okay. All right. So the purpose of the podcast is to educate, to enlighten, to empower you with clear, concise, objective, unbiased information so you can make some great decisions for yourself, for your family, for your church family, for those who you are in contact with. All right. So I'm going to jump right on into the podcast. Here we go. Today's podcast is titled The Bell Curve of Life Insurance. The bell curve of life insurance. What do you mean by that, Ernest? So now people often ask me, how much life insurance should I have? They want to know what the amount is that they should have. And also, what type of life insurance should I have? Those are like 2 big questions I get, whether someone sees me at church or, somewhere out, or if I'm at a speaking engagement, like different organizations ask me to come speak on investing or financial planning or insurance. Those are 2 big questions I get all the time when it comes to life insurance. How much should I have? What type should I have? And that's a good reason why that's being asked, right? Because those are 2 big key components of buying a life insurance. You want to make sure you get the right amount based on your need and the right type of life insurance based on your need. So I understand it. I get that. If you don't get that right, either one of those components right, the right amount or the right type, it could be problematic. You could have problematic results, right? So if you don't get the right amount of coverage, well, guess what? Maybe your family doesn't have enough to maintain their standard of living if something unfortunate happens to you. Or they have to do trade-offs like, okay, can we do this, but not that? Or, just things they shouldn't have to deal with, really, because you should have had the right amount in your plan in the first place. Or if you don't get the right type and the premium goes through the roof at some point and you can't afford it anymore, or the policy terminates, that's a problem too. And then you're trying to scramble and get coverage when you're much older. You're 60, 70, 80 years old. Not going to be as easy to get coverage as when you were 20, 30, 40 years old, right? So I get it. I get those questions all the time. I can't address those right now. I've addressed those topics in different podcasts. So click through my YouTube channel and take a look at which podcast applies to those 2 different questions. But today, what I'm going to do is take a little bit more in-depth look at how to understand the amount that you need. Okay, so life insurance is like a bell curve. That's why I say podcast is titled The Bell Curve of Life Insurance. So here we go. I did a little illustration here. Now, y'all don't talk about, I just did this for illustrative purposes. Don't talk about my chicken scratch, right? So I don't have a fabulous team of producers and all this other kind of stuff. This is just little Ernest Burley trying to just spread some good information out there. So here's a bell curve that I drew on a piece of paper just a few minutes ago, just to say, okay, let's get illustrative. Don't talk about my illustration, okay? So the bell curve, here you go. On the left side of the bell curve, you have less responsibilities, right? You're a child, you're a teenager, young adult, so you don't have many financial obligations, right? So your need for life insurance is less on this side of the bell curve. Even though I've done a podcast, I'm pretty sure I've done at least one podcast on the advantages of securing life insurance for children and young adults. You lock in the low rate while they're young and healthy, and the rate's good for the rest of their life, right? They're 5 years old, 10 years old, 20 years old, 30 years old, 40 years old, 80 years old, same rate, right? So that's the advantage. That's the strategic advantage of getting life insurance for children, young adults, and teenagers, or what have you. But on a financial obligation part, they don't have any financial obligations, right? They're children, right? So on this side of the bell curve, you have a lower need of life insurance, right? But as you get older, you become a young adult. Now, there's some young adults that have children, right? So they should have life insurance. If you're a parent, you should have life insurance. That's just, we don't need to debate that, right? Because if something unfortunate happens to you, you want to make sure your children are taken care of. So yes, you should have some life insurance, definitely as a young adult if you have children. As you go up the curve, then you're an adult. Now, some people are adults, but they're not really, they think they're grown, but they're not really grown. If you're not paying your own bills, you don't have your own household, you might be an adult by age, 18, 19, 20, 25 years old, but if you're still staying home with mom and daddy, you're figuratively an adult, not literally, right? So, or the other way around. Okay, in either case, as you go up the bell curve, right, you have more financial responsibilities possibly, right? Maybe you have a significant other or a spouse. Maybe you have children, maybe you have a home, maybe you have another property that you own, maybe you have a vehicle or vehicles. So you have a lot of financial obligation and you have people relying on you. You're at the peak of that bell curve. So that's when you have the greatest need for the greatest amount of life insurance. And then you start going down on the other side of the bell curve and your needs start decreasing as far as the amount of life insurance that you need. You become an empty nester. So the children are out of the house. Now, I don't want you still taking care of your 30, 40, 50-year-old child. If they're that, you don't need to be taking care of old children, okay? Don't enable your children, because if you enable them, you disable them. That's in my first book, Money Management, Easy as 1, 2, 3. You need to cut the cord. I think I've talked about that before too. But you become an empty nester, so that financial obligation is taken away. You don't have dependent children, so that financial obligation is taken away. Then you have less debt. So hopefully your cars are paid off. Your mortgage is either paid off or substantially paid down. You don't have any credit card bills. So hopefully you don't have credit card bills up here either, because we've talked about that, okay? So you have less financial obligation or debt on this side. So you keep going down that curve, you keep on living, hopefully your financial obligations go down. Then you retire, right? So if you still have a spouse or significant other, then you want to make sure they're taken care of if something unfortunate happens to you. So you still want some coverage down here on this side of the bell curve. And I've talked about that. Everyone should have some permanent life insurance, because you don't want to be trying to qualify for life insurance when you're 60, 70, 80 years old. Really not in your 50s either, to tell you the truth, because the older you get, the more it costs and the harder it is to qualify for some people because of some health condition that maybe has cropped up. So that's the bell curve of life insurance. Your greater need, your lower need is on that left side of the curve, but as you go up the curve, you have a greater need of life insurance. And then as you go down the curve, I think you still have a great need of life insurance even on the other end. but you have a lower need. Maybe you don't need up here, you might need $1 million or more because you have a mortgage, you have cars, you have children, you have college to fund, you have all this stuff, you have a spouse, significant other, you have all this stuff that you're financially responsible for, man or woman. This is gender neutral. But then you on this side, you don't have all of that. All of that's kind of gone away for the most part, but you still want to make sure you have some coverage in place for final expenses. Some people want to leave a legacy. So some people do it with real estate. Everyone's different. So I'm not here, knocking whatever you're trying to do. But ideally, you want to have some life insurance that's permanent on the back end that whether you're 80, 90, 100 years old, you have that coverage there to take care of whatever you want it to take care of. And that's it. So that's it for today's podcast. I just wanted to kind of show an illustration of how the bell curve of life insurance can be shown to kind of clarify, why you need a certain amount of coverage at a certain stage of your life. And you actually figure out the amounts you need. I've done podcasts on that with the acronym LIFE, right? Life. The L is for liabilities, the I for income replacement, the F for final expenses, the E for education for your children. And that's it. Okay, today's podcast is over and done. Hopefully it kind of clarified some stuff for you there. Hopefully it's useful and helpful. Okay, so that's it. I want to thank you guys for listening like you do every week. I really appreciate that. I ask that you forward this podcast to your friends, your family members, your coworkers, your church members, your employers, your coworkers, everyone. You send them the link to my YouTube channel because all of my podcasts are on my YouTube channel. It's just my name, Ernest Burley, or Ernest Burley Jr. That's the name of my podcast. And just click around in there. I have a wide array of topics on my podcast channel, everything from real estate to infinite banking to whether you should rent or whether you should buy a vehicle or a house, truthfully, whether you should pay off your mortgage early or not, whether you can how to be a successful business owner, all different types of things are on that YouTube channel. And you click around in there. I think there'll be something that would be helpful for you. And show that information to your friends, family members, church members, coworkers, employers, things of that nature, and ask them to subscribe. So I forgot to mention that. Subscribe first, and then click around in there and ask your friends and family members and church members and coworkers and cohorts, all of them to also subscribe, and then forward the link to their friends and family, etc. Okay. If you want to connect with me, really easy to do. You can email me, ernest@ernestburleyjr.com. That's my first name at my full name.com. Or you can go to my website and email me from there. My website is just my name, Ernest Burley or Ernest Burley Jr. ernestburley.com or ernestburleyjr.com, whichever one is good for you. And I have a lot of good information on my website too, like calculators and informative videos and all that great stuff is on my website also. Or you can call my firm. Very easy to do that too. My firm is here in Bowie, Maryland. Even though I have clients all over the country, my firm is in Bowie, Maryland, just outside of Washington, D.C., the nation's capital. And the phone number here is 301-262-2600. Again, 301-262-2600. That's it for today's podcast. I have to read off my disclaimer, of course, since I mentioned the fact that I am a certified financial planner, investment advisor, all that kind of good stuff. All right, so here we go. Burley Insurance and Financial Services, Inc., 13621 Annapolis Road, Bowie, Maryland, 20720. That's where my firm is located, even though, like I said, I have clients all the way out west, east, north, south, all over. And I love them all. Right? Securities and investment advisory services offered through Next Financial Group, Inc., member FINRA and SIPC. Burley Insurance and Financial Services, Inc. is not an affiliate of Next Financial Group, Inc. This material is not intended as an offer or solicitation for the purchase or sale of any security or other financial instrument. Past performance does not guarantee future performance. All the views expressed are those of Ernest Burley Jr. and Burley Insurance and Financial Services, moi, and not those of Next Financial Group, Inc. Next Financial Group, Inc. does not provide tax advice. And that's it for today's podcast. Thank y'all for tuning in. I appreciate you. Forward it to others. Until next time, y'all be safe out there and y'all take care, okay?